people really use those, especially in big moves. So I believe pivots are very, very important. And you can identify them by looking at the top, the bottom of a candle, and also where they close, right? Now, the when to use pivots is when you don't have other information. So that's when they become important. So like Meta gaps up in after hours, it's above all the moving averages. Then I flip to the pivot and say, okay, what can give me some, like all you're doing is reading tea leaves, right? So there's no more moving averages. I transfer to the pivot. It really helps a lot. So I encourage you guys, I'm not saying someone's dumb if they don't use them, but you're missing something. Like, I am so not special. I just learned what people are using. No one taught me this, by the way. And you're not going to read about pivots in a book very often. But I learned that's what the market's adjusted to in this great bull market. And they'll very often be where people buy stuff because a stock is overbought and there are not enough sellers to maybe pull back to the 8-day. So what do I do naturally? If I want to buy it for the 8-day, I'll look at some sort of pivot to give me a hint. And I'd love to now go to ENPH and kind of, continue with this pivot conversation, but also something I want to use on the 8-day. So in essence, you have a gap, right? You have a big pro forma gap, or you have a big, what we call a pro gap, excuse me, or after earnings. So here's what your average trader does. They look at the low, 47.77, the day after earnings, and the high, 52.93. To make sure we're all on the same page, you guys with me? You see that, right?
Yes.
Yeah.
Basic trader doesn't overthink things. The next breakout is when it gets over the high. That's your pivot. Even if there's not a moving average. The next place for a lot of trend traders to add risk and get aggressive is going to be when it gets through that high, right? They ideally are going to look for it to base, wear off its overbought status. But the next area for those that don't like to buy dips is not going to be till it gets above that high. Ideally, it's going to look like this. It's going to kind of base, form a U, take out that high and have continuation, right? Higher highs, higher lows. As many of you probably know, I like to buy dips and strong stops. So what I often do with these, which I want to utilize, is I look at the low and say it's 47.77. Anywhere near there, I'm a buyer. That's the low end of the range, and I'm pretty comfortable. Now, here's where charts and I really believe emotional intelligence come together. Is anyone aware that there are a lot of guys on the street who the day it broke the low of earnings would just sell? We don't do that. First off, just because it breaks doesn't mean it's going to close it. That's the first thing. So you don't just be like, it's below, I'm closing it. People are just like, they're stop out artists, right? Like they were willing to take no risk. It's impossible to make money if you're always getting out with a stop, right? So I also like to not do the obvious spots. So I take a deep breath. Where I'm really wrong is if it closes $1 below, like at the close, not intraday 30 cents. That's not really a break of a pivot. Everyone kind of follow that? Like, let it prove itself. It's allowed to breathe. 20 cents in the grand scheme of things is like the tiniest percent. So I often let them breathe. A lot of chartists are going to just say, it breaks this level, I'm out. I believe, let it breathe, right? Next, and I think this is important. It took me a lot of years to figure this out. And I even missed a lot, and I'll say thought some stuff. Have you guys noticed? I brought it up, but I want to ask if you noticed. Do you see the size of those candles for 5 days? Like 5 days in a row, you could have bought this at 47, 48, 49, and almost every day sold it at 50 or 51. Would you guys not agree that it's overbought? You probably wouldn't want to buy a stock above an 8-day for that long. Like normally, like, oh, wow, so far above the 8-day, I feel like I'm chasing. A lot of stocks, when they've been anointed, when they're hot stocks, will do this. And the correction occurs by time, not by price. What that means is it'll stay above the 8-day and not just go to the 8-day. It'll actually do what it's been doing, maybe have a down day like today. And then if you look, the 8-day sloping up, catch up 5 or 6 days later. That doesn't mean you can't buy the stock. right? Kira bought options the other day. You went from 3 to 5. Great thought, Jason. You are dead right. It'll be even a better example. He brought up Sanders. Anyone who waited for the 8 day to catch up probably missed 200 points. So there's a difference between buying a stock that's stretched or buying a stock that's first breaking out, that's being anointed. They often will not catch up to the 8 day for like 8 to 10 weeks.